Hi everyone, today let's talk about the JOLTS job openings. Then we'll take a look at all the usual data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the jobs report fell a lot more than expected and it was not good. So we've been seeing the labor market continue to soften, and this is another iteration of that. We can see jobs slumping to their lowest level in 3.5 years, which fell down to 7.67 million in the month of July, just 237 off of its June downwardly revised number, and the lowest level since January of 21. Economists were looking for 8.1 million, or about 500,000 more jobs, but of course we are not getting that. And now with this most recent decline, the jobs number is less than 1.1, almost a 1-to-1 ratio, down from its peak of a 2-to-1 ratio. So jobs market has sufficiently cooled, and it makes sense that we are going to get that rate cut in September. This was the other metric that the Fed was looking for, and sure enough, it's now come in to a reasonable level. And it's also worth talking about layoffs increasing 1.76 million, up 202,000 from June. Total separations jumped by 363,000, pushing the separation force to 3.4. So the big takeaway for me is that the labor market continues to weaken. And the question is, does this translate to the numbers on Friday? This is what we are looking for. The expectation is a 4.2%, down from a 4.3%. But if we get a 4.4% number or something like that, markets are going to hate that and sell off dramatically, in my opinion. Last time it jumped, it went down a lot, and this could be an early warning that it could happen again. Moving over to fear and greed, we stepped down to a 53 from a 65, so substantial sell-off here. We're still hovering right at these highs and lows from June-July timeframe, so it hasn't sold off a ton, but it was a pretty significant step down, and usually when you get these big moves, there is some follow-through on that. So something to consider. Momentum did hover a little bit at these previous highs back from the end of July. We'll take a look at that on the markets. Strength hovering as well in neutral. Breadth has been in extreme greed, and that is not a great indicator, especially with markets at these levels, expecting that to go down over the next couple days. And then put call ratio continues to elevate slowly back into fear. VIX continuing to elevate as well, hovering here today. And then safe haven demand, expecting this to continue to trend lower as we see bonds outperform over the next 20 days. And then looking at junk bond demand, extreme fear here makes sense. People are concerned about a weakening job market and a weakening economy, which is very bad for the junk bond market. Moving over to the economic calendar here, you can see the numbers for today. Factory orders 5%, a little better than expected. JOLTS report way weaker than that 8.1 million expectation. And then looking at Atlanta Fed, a little better there, 2.1 versus the 2. And then for tomorrow, initial jobless claims, another precursor to the data on Friday. We also get some economic data here, similar to what we got on Monday. Markets did not like that, so if that comes in weak, that's not going to be great. All of these are expected to be above that 50 mark, which is bullish, but it'll be interesting to see what we actually get. And then Fed balance sheet, that's been hovering here over the past couple weeks. And then don't forget, Friday is the big one with that unemployment rate coming out at 8:30. Moving over to Max Pain, 551, Max Pain's 555, still have the call wall there, still have the put wall at 550, so we're kind of stuck in here now. Call wall also at 560. We'll see if we get a little bit of a bounce from that 550 area. I think it could push through there. Bottom of the calls is 549, so not a ton of downside potential this week. Doesn't mean we can't spike down and then come back, but a 550 to 560 finish makes sense. Moving over to the charts, starting with the S&Ps, you can see down about 0.16, retested this level, sold off, momentum still bearish, RSI still bearish. It is hovering a little bit here, but this still looks like a consolidation down move. Just a hesitation here at that 21 EMA at 55.04. Next level for me would be VWAP and this highly traded zone around that 54.64 area. Really, you can't be too bullish while this momentum is continuing to trend down here in bearish momentum. Need to see this kind of culminate like this and start to trend back to bullish. Then you can start to think about it. And then once it does that, usually you get these kind of ripper moves. So right now, definitely leaning to the bearish side. And looking at the shorter time frames here, you can see we did get a little bit of continuation lower, tested my level at 550.12, double tap that at the end of the session, caught a little bit of a bounce, but selling again from that 21 EMA. That seems to be resistance now on the hourly chart. That's at 551.15. As this continues to trend lower, we'll probably see this zone break, and then your trend support is down here at 545.11. Maybe we tap that and then see a little bit of a bounce based on that max pain pricing. But either way, you can see same setup. looks like we're going to sell at least a little bit more over the next day or two. Moving over to the Tasty charts for the S&Ps, I'd be looking for that ATR trailing stop as your price target. That is 451.47. So again, that's about another 2% down move. Momentum continues to roll to bearish here. And then looking at that 4-hour chart, you can see that lowest ATR band, that's your near-term price target. That is going to be 546.25, looking for that zone there. Not a huge volume day, interesting to see that, but we're hovering in flat. We talked about how this might kind of pull back in time, but realistically, I'm expecting more selling here on the SPY. Moving over to the NASDAQ, similar thesis. We had a trend here. We gapped through it, retested, selling off. 2 days of bearish momentum. You can see the clear retest of the SMA selling off. Probably has a lot more downside. Based on this chart, I'd be looking for that 200 SMA sitting down at 18,101. We talked about this yesterday. Really no change to the thesis. That's about 4.5% lower. And then if that level breaks here, then you're looking for this trend, which is about 6 3/4 to about 7% lower, back into this consolidation from mid-April. So everything looks pretty terrible across markets, at least in the short term. And then moving over to the shorter time frames here, you can see on the hourly chart, got the big down move on Tuesday, got a little bit of a retrace, hit that 21 EMA, held a slightly higher low here from that pre-market low. I think that's going to be short-lived though. You can see it's already selling off after hours. I would guess there's going to be some follow through on that move. Couldn't get above this low from back here on Wednesday. Tested that 464.50 level almost to the penny. High of day was 464.45, so that's why it's important to have these levels. Touched it, almost retested here, and then sold off, and now we're getting more sell off after hours. So expecting more continuation on that to the downside. In terms of levels, 458.24 is my next one. You can see we bottomed out right there after hours in the pre-market this morning. Again, critical to have these levels. And then the next one, 454.40. If this zone breaks, which I would guess that it's going to tomorrow. Moving over to the NASDAQ here on the Tasty charts, you can see that first support is at 451.73 on the daily chart. Still in bearish conditions, still looking for a little bit more sell. That 144 EMA is sitting there as a zone of support. And then if that breaks, then your next level is that lowest ATR at 439.56. And then looking at that 4-hour chart, you can see that after hours selling coming through, 459.42 already. Looking for that lowest ATR band, which is currently sitting at 454.70, so right in line with that next level. Makes sense. Looking for a little bit of a sell there. We'll see how it plays going into tomorrow's session. After we touch that level, I do think we're going to get there tomorrow. Moving over to the Dow and the Russell here. The Russell was down 0.17, really tried to rally, got very close to that level. Once again, high of day was 215.37, my level was 215.42, so came right up to it, rejected. We're still holding that 21 EMA there at 212.50. After hours, we're at 212.57. My level is 212.10, so a bunch of support in here. Certainly could still hold this. Momentum did step to bearish here, so that's concerning. Based on momentum, you would expect more follow through, probably down to that 144 EMA, down at 205.87. But we'll see how that plays in tomorrow's session. If this starts to crater, it's probably going to go another 6 points or so. And then looking at the Dow, managed to stay just barely positive by 17 cents. Still hanging in there at these previous highs. Momentum still stepping to bearish, probably going to turn bearish either tomorrow or the next day. And then RSI might see a retest of that SMA, something where you get a dip here like we have seen, slight retracement, test that level, and then breakdown. Similar to this, you get the breakdown, hover, retest, and then get the bigger sell. So looking to see what happens here. Doesn't look super great. Clear divergence. Looks pretty awful on this chart. Moving over to the Mag 7, this actually hung in there pretty well. You can see this kind of triangular setup that we have. Tested this trend line here, bounced from that level, stayed positive on the day, 0.1%. Momentum is still bearish. RSI still bearish. Same thesis here. SMA trending lower, might see a retest and continuation lower. So something to watch here. That would actually fit with this kind of technicals. Bounce from here, retest this upper, and then see a bigger breakdown. We'll see how it plays. Right now, still hovering in this wedge without clear direction yet. Despite this high, lower high setup, you could still argue low, higher low. Moving over to Apple, again, falling directly to the level here. The low of day was 217.48. My level was 217.62, so just barely overthrew it, but we're into bearish momentum. RSI bearish, volume ramped a little bit on that selling. We'll see if this zone holds. It could. You can see this previous hold. If it doesn't, we're probably headed down to this trend, which is sitting about 7.5, 7 3/4% lower. Let's go ahead and extend out that trend line a little bit. which would give you a little bit of support in here around that 204.28 area. So we'll see how that plays. And then looking at Microsoft, actually did okay on the day, 0.13, a little bit better than Apple. And you can see it actually didn't wick as low as Apple did. Momentum still hanging in there. RSI still bearish. You can see starting to trend lower, so it doesn't look great there, but it looks okay, a little bit better than I would have guessed. I thought this was going to accelerate down here today, which it did a little bit, especially with my current price target sitting at 394.22, which is my next level here. It's hanging in there at this kind of consolidation low from the end of May, beginning of June. I still think that zone's going to break. I still think we're headed down to these two levels down here, but it hung in there a little better. And don't forget, this is still a distribution in my opinion. Distribution here, fake out, breakout, distribution, waiting for this to roll over to the downside. And you can see on the daily chart, we are below all the EMAs and SMAs, which is a terrible indicator. Moving over to Tesla and NVIDIA, look at Tesla here today. Good breakout, clean break above this trend line here. Should be looking for some more upside, momentum bullish, RSI back above the SMA. Everything looks good here on Tesla, 4.18% on the day, back above all the EMAs and SMAs. Look for some continuation here tomorrow. I think this is probably going to follow through at least a little bit. Hopefully it's not a fake out. I do like this setup. And then looking at NVIDIA, down another 1.66%. After the terrible day yesterday. Momentum bearish, RSI bearish. We'll see how it plays going into the end of tomorrow's session. 106.64 is the level. You can see we gapped through it. It's testing it here after hours. Interesting. 144 is the price target, 102.40. Think we're going to touch that at a minimum. And then if that zone breaks, you can see we're probably headed back down to these previous lows around that 90.63 level. Moving over to Amazon and Google here, we got Amazon 1.66% to the downside, momentum stepping down, RSI stepping down, breaking the SMA. Probably going to roll down, looking for 107.06 as your next zone of support. After this 174.23 level broke, you still got the 200 in there at 172.70, so that could be interesting. Clear consolidation of EMAs, 21 sitting in there as well, zone of support. If this breaks, that's your next level. If it holds, this would be a higher low setup from this previous low. Certainly possible. Interesting zone to watch there. And then Google, this looks terrible. It's continued to look terrible. We've been watching it for a while, expecting this to continue to downtrend. Your next support would be 155.84. And I do expect that to continue. Momentum just hit bearish conditions now. RSI still bearish, expecting this to hit oversold conditions. It's at a 33.85, so it's not far off, and I do expect it to go lower. Google continues to look awful. Moving over to staples and discretionaries, look at staples here. Just continues to be a straight rocket ship, 0.47 to the upside, volume ramping, RSI continuing to be overbought, momentum still bullish. High of day was 83.54. Still price discovery, still really nothing you can do about it in terms of levels. Everything is super strong. And then looking at discretionaries, continues to hover. Hung in there a little better than I would have guessed at 0.26. Still can't get above 185.36. Also tested the trend, still expecting this to fail. Some decent volume coming in there, probably Tesla holding this up. We saw Tesla looking very good. Maybe that's holding up this market, but we'll see. This still looks like a breakdown retest, looking for that breakdown, at least to the 21 EMA, down at 181.60. Moving over to oil and gas and utilities, oil and gas continues to hemorrhage. Back-to-back days, down another 1.62%. Still looking for this trend down here, so probably going to continue here down to that 128.50 area. My level is 128, momentum bearish, RSI bearish. We thought maybe this would hold this 21 EMA, didn't do it, broke right through it, continuing to sell. Probably going to keep selling to this previous low. And then look at utilities here, similar to staples, everything that is safe right now, continuing to see that rotation, super bullish on the RSI, definitely overbought, continues to rocket here towards my 77.96 level. Look at this volume as well, everything looks super good. So clearly a risk off market, people are selling tech, moving into things like utilities and financials. Moving over to breadth, this continues to sell off as you would expect. We got the continuation candle, hit the 21 EMA here on the 20, interesting. Similar to this here where you sell off, touch a zone, very close to my level. Low of day was 68.78, just above my level at 68.14. So right in here, we'll see if it holds. Momentum still bearish, RSI still bearish, just like everything. 50-day also stepping to bearish for the first time. RSI still very bearish. Waiting to see if this breaks that 50 level. 20-day did just barely. 50-day has a 51.25 on it, so waiting to see if that breaks here. And still looking for that 21 EMA. Need to see that 68.66 level break on the 50 if it's going to do it. Right now, this is a first test, waiting to see what happens. Moving over to the dollar, dollar sold here makes sense with the JOLTS report coming in as it did. Again, means we're closer to that rate cut. So the dollar didn't like that a whole lot. Didn't break the level though, didn't break the 9 EMA. That's at 101.28 and the level is 101.25. Still holding that zone. Momentum stepping to bearish. We'll see if it has any follow through. We're still above the SMA, so it's probably not going to crater. Still looking for a higher low setup off that 200 on the hourly chart. Still think the dollar is going to hang in there, which is going to be weak for equities. Moving over to yields, we are just centimeters out from seeing that normalization of the yield curve. Apparently it flickered back and forth a little bit. I saw some articles saying that we got back into normalized conditions on inversion, but at the end of the day, we are still there, 3.755 versus 3.766. So we're still there, even with this 2-year looking very weak, selling off aggressively. Maybe tomorrow we get a close with normalized conditions, but right now we're not yet. 10-year still hovering at support 3 3/4, with the 2-year headed towards my level at 3.665, which is right in line with the low from 5 August. So makes sense. See this sell off to that level. 10-year hopefully holds in this zone, and then we get that normalized condition. Moving over to bonds, bonds actually recouped a lot of those losses. Makes sense. We talked about this 21 EMA, touched that yesterday, bounced off that level. Still could reject from that 96.55 level. Momentum is bearish. RSI did move a little bit higher, but I would expect it to top out here. Doesn't look super great on JNK. But looking at TLT, we did get the continuation after yesterday's candle. Strong candle here, 1.29%. Still looking for that 100 price target. Needs to eclipse the high from 21 August. See how it plays. Was a pretty shallow dip. Would expect a higher high to come in my opinion. Moving over to the VIX. The VIX did go higher, 2.99%. Got all the way to my 22.5 level. Talked about that getting touched yesterday. Next target, if we break that 22.5, would be 28.89. We'll see how that plays. Momentum is bullish. RSI is bullish. Still expecting this to go a little bit higher over the coming days. Moving over to my accounts, I think I managed to net about $600 or so. Maybe $550, somewhere in there, which is pretty good considering both markets were bearish on the day. IRA was flat, $2. Really should have made more money there, but I rolled up into that strong move. Ended up having to roll out and down here. Back to $2.13 for tomorrow's session. Again, $2.22, $1.22. Really should have made that here today. That was a little frustrating, but got whipsawed on the Russell. Looking for that same credit tomorrow. And then looking at the Qs, pretty much the same position here. 461 for $2.81 credit. Also sold a 469 for 5 days from now for $1.57. Only 44 deltas. I think this sold a little bit more after hours, down about $1. So looking for that protection. We'll see how it plays in tomorrow's session. If that next level breaks, look for that 454 area. So watching this closely here on both of these. Let me know down in the comment section what you think of the JOLTS report and that news that came in today. Is it going to continue to drive markets lower? Is it a precursor to the unemployment data on Friday? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.